You may have just received your business insurance renewal and are experiencing sticker shock. Or you've been pricing out business insurance and you want to know what factors will increase business insurance premiums. In this video, I'm going to cover those issues and more coming right up. Hi, my name is Gordon Coyle, and before we jump right into business insurance premiums, can I ask you to do me a favor? Hit that thumbs up button. That'll help signal to YouTube that this is good content and help build out my channel. Thanks. So, what factors impact or increase business insurance premiums and rates? Well, there are several, but in 2021 and moving into 2022, the biggest factor has to be market conditions. The commercial insurance marketplace moves in cycles from hard market to soft market. Right now in 2022, we're in a hard market and have been for the past few years. Some coverages like commercial auto and D&O or directors and officers liability insurance have been particularly hard hit over the past 3 or 4 years, while workers' compensation insurance for the most parts of the country have seen price decreases. Hard markets are triggered by rising claim costs for insurers, increased litigation, increases in weather-related claims, as well as several other factors. For areas of the country like the West Coast, some areas of the South, and coastal areas, we've seen pricing go up for business owners' policies and property policies due to weather-related claims, wildfires, wind and hailstorms, and flooding. I suspect we're going to see weather and natural disasters continue to push rates higher for property insurance and business owners' policies into the near future. So, on an individual business level, what are the biggest factors that will impact your premiums? The first is claims. Generally speaking, one claim is not going to impact your rates greatly, unless it was a very significant dollar value claim. But if you have a few claims over a few years, you're going to see your rates increase, and you may even see a non-renewal of your policy. This is true across the board for all lines of coverage. Business owners or BOP policies, workers' comp, business auto, etc. In fact, in the workers' comp policy, there's a mechanism that directly addresses claims called the experience rating factor. If you have more claims than the expected rate of claims in that policy, you'll have a debit factor applied to your policy, which can stick with you for up to 3 or more years. If you have a commercial auto policy and you hire drivers with poor driving records, or your existing drivers have poor driving records, you'll probably see your rates rise due to the increased risk of claims. Of course, if you have an increase in payroll, sales, the number of employees, the number of vehicles in your business, you'll see your premiums increase. So this can happen on renewal and or at audit of a prior policy term. This stands to reason. Your business increases, your business insurance costs are going to increase. And for the most part, this is good news. Your business is growing. The next factor I want to go over is not complying with loss control. If your insurance company has performed a risk control or loss control visit and identified factors that they want improved and you don't implement those recommendations, you can see an increase in your premiums. Commonly, we see simple recommendations like having fire extinguishers inspected and tested, improve general housekeeping, create a safety plan, etc., and the business owner ignores them. I get it. You're busy and you don't have time for this. But ignoring risk control recommendations will often bump up your rates and premiums for all forms of coverage affected. It basically sends a signal to underwriting that you don't care about minimizing risk and that they have to build in a cushion to their premiums to cover potential claims that are more likely going to happen on your account. So, what can you do to combat rate increases? The answer to that question is going to depend on several factors. Let's start at the top with claims and loss control. If your company is experiencing problems with claims, you can do something about it. And this is where an expert insurance broker can help identify potential problem areas and create strategies around those issues. For example, let's say you've had several employee slip and fall claims. Working with a knowledgeable broker, they may be able to identify the root causes of those slips which result in falls and injuries to employees. It could be wet floors, icy conditions outside, or slick work surfaces, and then recommend proven methods to prevent or minimize those claims from occurring. I've recommended the implementation of non-slip footwear for employees, as well as better housekeeping to reduce water on floors, and have seen a dramatic decrease in those types of claims. The point is that working with an expert who can bring risk management knowledge and solutions to you may prove to be very valuable and help you manage insurance costs, but also reduce the indirect costs that impact your bottom line with every claim. And when it comes to loss control or risk control, it's important to think it won't happen to you or that you're too busy. I've seen these issues in the past get away from some business owners with complacent attitudes to the point where getting insurance at any price is difficult. Market conditions and weather are pretty much out of your control. So what do? Here, I would recommend speaking to your broker about what they think they can help you do to mitigate price increases. If you feel like you're not getting the whole truth or that you're getting a runaround, then it may be time to look for a new broker. What you'll want to look for is someone you like and feel is trustworthy. You'll also want someone who represents a broad cross-section of the marketplace and has the tools to help you address the situations you face. This can include risk management expertise, a risk management library to help you provide a written safety plan, or provide information and strategies around reducing risk. I would recommend going to an independent agent or broker and not a direct writer or captive writer or even an insurtech firm. Direct or captive agents can only offer you one option, the company they work for. Insurtech firms usually can only quote one insurance company as well, or if they can quote multiple companies, most do not have the skill set or tools to help you reduce risk and get you on the right track. By the way, my firm represents a very broad list of insurers, programs, and markets globally, and we have a risk management library, the tools and expertise to help you, and we have a professional and friendly team to be there with you after the sale to answer questions, get you your certificates of insurance when you need them, and be quick about it, and to be your advocate. If that is the type of insurance broker relationship you're looking for, why not give me a call and let's chat? My contact info is coming right up, and there's a link in the description box below where you can book a call directly on my calendar. I promise no hardcore selling, just some honest conversation to see if we may be a good fit for you and your company to help resolve the pain you may be feeling around rate increases, or claims, or renewal premium sticker shock. Thanks for watching. And if you didn't hit that thumbs up button, give it a hit. Thanks.